Walmart's doing a good job. There's no doubt, led by Doug McMillon, who's a stud, and the rest of his management team. They really deserve a lot of credit. This is as unique an environment as there's been in a generation for retail. And the large retailers are gaining share. They're doing a better job of navigating through some of the challenges. It's showing in their results. We expect that coming out of this pandemic, the big are going to get bigger, and that makes their stocks look relatively more attractive even amongst all this uncertainty. So Walmart in particular is set up very well heading into 2022. The relative appeal of low prices in an inflationary environment looks good. It's gaining share. That should continue into next year. And it's just starting to realize the benefit of these alternative profit streams like advertising, third-party marketplace, selling delivery as a service. Essentially, it's emulating key attributes of Amazon's business model, and it's doing it well. We think the market will pay a premium multiple for that, and we like the stock.
Okay, so we're showing a chart of the stock year to date. It looks a little bit like a roller coaster for Walmart, and even though we had these strong comments and strong numbers from the company this morning, it's trading down 2% right now. Why?
It's really a game of expectations. The belief was that sales were going to be good, which they were, and the flow through based on where it's been over the last couple of quarters was also going to be good. Really, the difference here is that they didn't see as much of a difference in COVID-related expenses this year. Last quarter, those COVID costs were down $1 billion. This quarter, they were only down $100 million. The gross margin was down, but down less than 20 basis points. They're managing through this inflationary environment by balancing the gains that they're trying to give to the consumer with shareholders. That's going to continue into next year, and it's going to make the stock set up really well, especially as you mentioned, it has underperformed. It's make the relative valuation look more appealing here. We like Walmart a lot in the next year.
How about Home Depot? I mean, stock's trading at a new high today. Certainly we keep talking about this shift to services from goods and people emerging from their homes after working on their homes and buying furniture in the middle of the pandemic. Is this name still going to benefit as we shift into a more normalized, hopefully, setting in 2022?
We will shift into a more normalized setting in 2022, but structurally, the demand for home improvement and home-related products is higher. The instances of working from home are going to be greater than they were previously. Thus, there's essentially been a value shift from the commercial real estate market to the residential real estate market. Home Depot is a play on that, coupled with an exceptionally run retailer. Makes it set up well for the next couple of years. The stock has done really well year to date. It trades at a big multiple, but it can grind higher as it generates earnings growth into 2022 and beyond. It's just gone through this really remarkable period of investing and building capabilities. We expect that to moderate next year and allow the company to manage its earnings growth amongst a very uncertain backdrop as consumers do shift from other activities away from doing a lot of the home improvement projects that they've done over the last couple of years.